Hello, so I'll be doing this web series for Ind As and accounting standards. So there's a lot of dilemma in students who want to every student want to learn Ind As, but everyone want to learn in detail, but there's no video available on YouTube as to provide students with regular Ind As updates and insights. So I would just try, and this is the introductory video, and I'll be covering all Indias in small videos, small web series kind of thing. And it's just an effort. If I'll just succeed, then it's good. I'll just try. Okay. So first of all, we'll be starting with differences in one Indias and the other AS, corresponding AS, and then we'll be studying that Indias in detail. By detail, I mean I'll be covering the bare Indias and its paragraph wise. Okay, so it will go on as it will, develop as we'll see it. So first, let's get started with the differences of Indias 1 and AS1. So India's one, as we know, is very wider in scope, and its title only states presentation of financial statement, and as on the counter side, the accounting standard one which was enforced earlier, its its title is disclosure and policies. From the title only we can make out that there's a huge difference in scope within both of these. So we're just going on the IFRS track, which is the principle based track, and trying to converge all global standards. So basically you do not have an idea of these standards, or going through the standards for the first time. I would just suggest to have a brief idea of accounting standard 1 first, and then watch this video. So let's start it. So India's one is wider in scope. It describes the presentation of financial statement. If you see the pair India's, it has each things described in detail. Okay, and AS1 doesn't describe these things. These things were described by companies' activity schedules. So till now we were using that, but now we have shifted to India's one. So it will be defining uh, accounting standard for us. So secondly, it includes, if it complies to all the accounting standard, that is Indian accounting standard, then we'll have to uh, you know state the fact in financial statements in note that we are complying with all the accounting standards which are available or which are applicable to our entity. Okay. Otherwise, on the counter side, that AS1 it's not required. It permits India's one permits deviation if management concludes compliance would be misleading and regulatory framework does not prohibit such departure. So that if the management is like, if some presentation is required in some industry, or some, you know, specific thing is there present in the industry of which the India prescribes a solution which is not currently going to solve the problem, or the presentation will be so haywire or molded, or the transparency will be jeopardized. So if that happens, so that we cannot, in that situation we the management has the liberty to do, to use its intellect and present it in a better way, which can gives a better situation or presentation of the financial statement and true and fair manner. And in AS1 it was no such provision was there. In Ind As1, the presentation of non-current and current assets and liabilities should be there in the financial statements, but in AS1 it's not there. Ind As1 removes the concept of extraordinary item, which is in line with IFRS. Okay, so a US GAAP were following extraordinary items, and now in IFRS there is no concept of extraordinary items. So in AS1 it was there that we have to disclose the extraordinary item in profit and loss account, and we have to disclose it separately so that the effect of the extraordinary items on the profit and loss for the year can be perceived easily and can be demarked clearly by stating as a separate line item. Balance sheet at the beginning of the earliest period we have to give in Indias, if we for the three conditions. The first condition is if we apply some accounting policy. So I'm emphasizing on the word accounting policy. Retrospectively, then we have to give the balance sheet at the beginning of the beginning clear earliest period, okay, which was like when the accounting policy was applied. If we secondly we if we retrospectively restate the items of financial statement, or we reclassify some items in financial statement, then we have to provide the balance sheet at the beginning of the earliest period, okay, which is available. And in AS1 no such requirement was there. Reclassification of item: if we reclassify an item in financial statements, then reclassification requires disclosure of its nature, its amount, reason to reclassify in the notes to the financial statement. In AS1, no such provision was provided. Statement of change in equity, which includes reconciliation between each component of opening and closing balances of equity. So this statement of change in equity is also something in line with IFRS, which has been now uh, part of financial statement, which was not there in our previous accounting standards. So we'll just do this statement of changes in equity in detail in the detailed Ind As1 video. And disclosure requirements are okay. There are now many disclosure requirements, so we cannot disclose, discuss these requirements in a very short video. So I'll be doing some separate parts video individually for the Ind As. So अपन उसमें we'll do that.